If you look over the history of Bitcoin and you do a 5-year rolling average month by month, every month, Bitcoin has creamed every other asset class. True, it is more volatile, and you're picking up on some endpoint sensitivity. Yeah, of my financial net worth, pretty much all of it is in innovation, let's put it that way. It's just my degree of confidence in the depth of our research gives me the courage, people might say, to be more aggressive in this realm, either in our kind of funds and private funds or crypto, primarily Bitcoin. And I would say this is going to be a very rough guess because
Sure, no
I
problem.
don't really. Yeah, my guess is that excluding art, the company, and excluding real estate, that of the financial net worth, it's at least 25%.
A lot of people are really excited about it, and the price has gone up because of that. I see it as a proactive step. There will be a sale on the news. According to many, things are moving at a breakneck pace. That may be the case, but I doubt it will endure for long. Given that the CC has given the go-ahead and that there are institutions sitting on the sidelines, they would not proceed unless the SEC gave their approval. Clients and gatekeepers alike have been quite numerous. Even GBTC, which they did not possess, was not permitted in their portfolios until it was approved by the SEC. Thus, I believe this to be a significant occasion. There is genuine scarcity value here, and I believe the flows will help prove it, since there are currently around 19.6 million Bitcoin in circulation. And there are 15 million in the possession of people we refer to as powerful hands. Their hands are strong. Those are powerful hands. We can keep an eye on them as they haven't done anything with their Bitcoin in around 6 months. Thus, 15 out of the 29.5. Additionally, there will only ever be 21 million Bitcoins in circulation. Therefore, I believe that scarcity value will begin to play a significant role in this context. The procedure of getting a wallet and figuring out custody and all that was either too cumbersome or discouraging for many retail holders. All of that will be made much easier by this. Access is a breeze. On top of that, I believe many are holding out hope for convenient access. There is no doubt that the early adopters exist. Despite this, we think this asset class has the potential to serve 1 billion users. I would estimate that there are 50 million in the US. I am uncertain. If the global estimates of 100-200 million are correct, then the internet has finally become a financial superhighway, and this is a valuable asset. Due to the lack of anticipation for the eventual rise of online banking and shopping, this layer was omitted by internet engineers in the early 1990s. It was merely a venue for the dissemination of data. The usage of the internet by customers was still considered unlawful even in the 1980s. Therefore, that was our starting point. Naturally, these days we do a plethora of things online. A number of intermediaries exist primarily to limit risk, but they also add unnecessary complexity. Eliminating them will make things easier. A peer-to-peer network is more accurately described here. As a result, we anticipate that this network will have billions of users in the wild. In 2023, Bitcoin proved to be more than just a risky asset. Contrary to what most investors had previously believed, it thrived in strong markets. In markets prone to crises, they never expected it to do well. And naturally, it bombed in 2022 due to a slew of crises. However, in March of last year, what transpired during the regional bank collapse? There was a collapse in the Key-Ray, the regional bank index. Some banks that went bankrupt were Republic, Silicon Valley Bank, and Signature. In the middle, Bitcoin virtually doubled in value, maybe even increased by 40. How did that inform us? We are informed that there is both an asset risk and an off-asset risk here. To us, that meant a lot. Truthfully, we won over some new followers. Now C-suite executives in the banking industry are referring to it as a retreat to quality. A journey to a safer place, we would say. Just why do we use that phrase? In contrast to the banking system, there is zero counterparty risk. The financial crisis of 2008-2009 was triggered by counterparty risk. The regional banking crisis was once again sparked by the fear of counterparty risk. There is no counterparty risk in this transparent, decentralized network. Now, we're arguing that Bitcoin's scarcity value and lack of counterparty risk make it a hedge against both inflation and deflation. Bitcoin has outperformed every other asset class when looking at its history through a 4 or 5 year rolling average month by month. Yes, it's more unpredictable, and during a bear market, you can feel the sensitivity of the endpoints. Our plan had a devastatingly bad market in years 21 and 22. A lot of people have pointed out that zero interest rates are the sole reason your technique has ever been successful. That's correct, and we won't be climbing. I could not agree with you more. I've been doing this for over 40 years, and our method has been successful even in circumstances where interest rates are on the rise. Not only that, but our flagship strategy saw an increase of over 85% in 2017, the year interest rates finally began to rise up. However, Bitcoin's value skyrocketed in 2017 due to rising interest rates. It probably ranged from $1,000 to $20,000 or more. Therefore, the interest rate argument has failed throughout history. The fact that we are now operating in a market with extremely large trading volumes is something that has definitely affected our equity strategy. At peak times, high-frequency trading may account for as much as 75% all trades. They conduct quantitative research, get their hands on a few algorithms, and then use those to predict how the market would react to events like interest rate hikes. And you will experience those periods of weakness. Truth, however, will ultimately prevail. The potential for profit of our businesses and the worth of Bitcoin, the first ever digital, decentralized, rules-based currency system. An enormous concept. Could Bitcoin fulfill all three functions of money? When we conducted our research and wrote our first white paper in 2015, Art Laffer. To work with us, we reached out to Art Laffer. Economist fame befell him. His name is likely familiar to you from the Laffer, and he's a scholar of money as well. Robert Mundell, who was awarded the Nobel Prize in Monetary Theory, was his tutor. My friend told me that he had been waiting for this since the gold window closed in 1971, and it finally came to light when he understood what Bitcoin was. A monetary system based on rules. At the moment, monetary policy is completely bonkers. A monetary system based on rules. Wow, that's a big idea, I thought. In 2015, when Bitcoin was $250, keep this in mind. What do you think about this concept, Art? Then, what is the size of the money supply? The amount was $4, 5 cents trillion back then. Up to $7, 7 cents trillion now. This concept is massive. Approximately $800 billion is the current market capitalization or network value of Bitcoin. According to our assessment, it still has a long way to go. Now that there will only ever be 1.5 million Bitcoin generated, the scarcity value of institutions pressing in will be highly contentious. Bitcoin, in my opinion, is still very much a game-changing innovation. We continue to believe the mistaken notion that our equities can only thrive in extremely low or falling interest rate environments, which is why they are significantly lower when compared to the Nasdaq. I think we're returning to that setting, by the way. Thus, I believe that Bitcoin and our ilk of stock will be affected harder by the higher for longer. The halving is one of the events scheduled for this year. And here we may also draw an analogy to gold. Over the past several decades, the world's gold supply has grown by, on average, around 1% annually. Following the halving, this year will mark the first time that the annual rise in Bitcoin supply will fall below the 1 average. The drop will be to 0.9. We believe that more and more investors will weigh the pros and cons of digital gold and gold as a whole, and that the two can coexist. However, we predict that younger investors who have grown up with technology will choose Bitcoin over gold. Indeed, the vast majority of my wealth is concentrated in the innovation sector. I am confident in the depth of our research, which gives me the courage to be more aggressive in this realm, whether it be with our kind of funds, private funds, or crypto.